Good morning, good afternoon, good evening, and welcome to press conference of the 4th G20 Finance Ministers and Central Bank Governors meeting under the Italian G20 Presidency. The conference will be hosted by the Italian Minister of Economy and Finance, Daniele Franco, and the Governor of Bank of Italy, Ignazio Visco. Also at the table, Alessandro Rivera, Director General of the Treasury, Luigi Federico Signorini, Senior Deputy Governor of Bank of Italy, and Angela Barbaro, Head of the Communications Directorate at the Bank of Italy. Minister Franco and Governor Visco will make the opening statements, after which we will have a Q&A session only on the issues of the G20. The statements will be delivered in English, and we kindly recommend to ask a question in English as well, writing on the chat. I do apologize in advance if it won't be possible to give space to all the questions. Minister Franco, the floor is yours.
So thank you very much. Good evening, good morning, good afternoon. Today the G20 Finance Ministers, Central Bank Governors met in Washington for the fourth and last official meeting under the Italian Presidency. Today we continue the productive dialogue that we launched at our first meeting in February and then pushed forward at our meeting in April and July. We also agreed on a series of important commitments which are detailed in the official communiqué. But before addressing your question, we would like to give you an overview of today's discussion. First of all, Governor Visco will summarize the discussion on the global economic outlook and on financial sector issue. Then I'll go through today's discussion on 4 priorities of the G20 agenda: global health, international taxation, support to vulnerable countries, and climate action. Please, Ignazio.
Thank you. In our meeting today, we had, first of all, a discussion on the global economic situation, the outlook, and the risks, observing that the global recovery has continued at a solid pace in the last few months, recognizing once again the key role of vaccination campaigns and of the support of economic policies. At the same time, the recovery remains highly uneven across countries, and there are still considerable downside risks. The pandemic continues to be a major source of risk for the global economy, also because of the possible spread of new variants of COVID-19, and vaccinations are still the first and most important response, not only for public health purposes, but from a purely economic point of view as well. We concur that economic policies should remain supportive for as long as necessary, with the aim of addressing the consequences of the pandemic and steering the global economy towards a strong, sustainable, balanced, and inclusive growth. In this respect, we have reiterated our commitment to advancing the forward-looking agenda that was set in the G20 Action Plan as updated in our April meeting. In our discussion on the global economy, we focused on inflation developments. The key message that emerged is that the current higher inflation in many advanced countries continues to reflect factors such as supply bottlenecks relating to the pandemic that are considered transitory and are therefore expected to fade out, albeit gradually. Inevitably, the widespread uncertainty surrounding the current situation requires central banks to monitor price dynamics closely and to continue to communicate monetary policies as clearly as possible. In our meeting today, we also had this session devoted specifically to cross-border payments. The core of our discussion was the G20 roadmap for enhancing cross-border payments that was endorsed by G20 leaders last year. This initiative is motivated by the awareness that citizens and economies worldwide would greatly benefit from faster, cheaper, more transparent and more inclusive cross-border payment services while maintaining their safety and security. Our presidency has given priority to the implementation of the roadmap by developing a set of ambitious but achievable global targets to address the challenges of cost, speed, transparency and access faced by end users. The report setting these targets will now be transmitted for the endorsement of G20 leaders. The next stages of the implementation work entail the definition of proposals for improving the underlying systems and arrangements and developing new systems, as well as the exploration of the potential benefits and challenges of innovative payment arrangements and infrastructures, including the so-called global stablecoins and central bank digital currencies. With respect to global stablecoins, we continued our previous discussions on how to ensure the soundness of such arrangements. Importantly, as you can read in our communiqué, we have reiterated that no so-called global stablecoins should commence operation until all relevant legal, regulatory and oversight requirements are adequately addressed through appropriate design and by adhering to applicable standards. As far as central bank digital currencies are concerned, our discussion focused on the potential implication of their use in cross-border payments. In this respect, I want to stress that our discussion must not be seen in any possible way as a prelude to a decision to issue a central bank digital currency by G20 countries, which all retain sovereignty over such a policy choice. I'd like to recall some other areas of work concerning financial sector issues in which the G20 has made important progress since its last meeting in July, and one of these relates to taking stock of the lessons learned during the pandemic from a financial stability perspective. The FSB has delivered a final version of the report that we had already discussed in July, and while the financial system bolstered by the post-financial crisis regulatory reform has been largely resilient during the pandemic, the report highlights some regulatory issues and gaps which we are committed to addressing, including by completing the remaining reforms and further evaluating the functioning of prudential buffers and any potential sources of excessive procyclicality. Our presidency has also given priority to the FSB's work, which is aimed at strengthening the resilience of the non-bank financial intermediation sector, what used to be called the shadow banking. And in particular, as a first important step in our endeavor to address the vulnerabilities of non-bank intermediation, the FSB has delivered a package of policy proposals to enhance the resilience of money market funds. Another important area of work is sustainable finance. The Sustainable Finance Working Group, that is co-chaired by China and the United States, has delivered two important documents. The first is a synthesis report of the activities carried out this year in three priority areas: strengthening the comparability and the interoperability of approaches to align investment with sustainable goals, overcoming informational challenges by improving reporting and disclosure, and enhancing the role of international financial institutions in supporting the goals of the Paris Agreement and the United Nations Agenda 2030. For each priority, the report identifies the main challenges and puts forward a set of recommendations for overcoming them. The second document is a G20 Sustainable Finance Roadmap, which provides a multi-year agenda with the aim of scaling up sustainable finance. This roadmap is divided into different focus areas, which include the alignment of financial flows with sustainability goals, the access to reliable and timely information on sustainable risks, opportunities and impacts, the assessment and management of climate and sustainability risks, and the leverage of public finance and incentives. It is a multi-year plan which has been developed in synergy and complementarity with other relevant initiatives, especially the FSB's roadmap for addressing climate-related financial risks, which we endorsed in July. It focused initially on climate, but it is a flexible plan that makes it possible to accommodate the evolving sustainable finance landscape and the priorities of future G20 presidencies. In this perspective, the roadmap paves the way for addressing issues beyond climate that might require higher prioritization in the near future, such as transition finance, biodiversity, and social aspects. Last but not least, financial inclusion. The Global Partnership of Financial Inclusion, co-chaired by Italy and Russia, successfully carried out its work plan for this year. Its implementing partners delivered 6 high-quality reports, and they analyzed the impact of the pandemic crisis on the financial resilience of individuals and the micro, small, and medium-sized enterprises, and on remittance flows. Based on the results of this report, the GPFI, the Global Partnership, has delivered a widely appreciated menu of policy options for digital financial literacy and financial consumer and micro and small and medium firms protection. We are confident that this product will provide an extremely useful guide, also beyond the G20, for the adoption of policies to leap forward in financial inclusion in the face of new challenges and opportunities offered by the growing digitalization of finance. And I'd like to hand over to Minister Franco, who will comment on the other topics.
So thank you, Ignacio. As you all know, our agenda has been shaped around three pillars: people, planet, and prosperity. Today, ministers and governors had the opportunity to discuss some of the core priorities of this agenda. That is global health, climate action, and the support to vulnerable countries. These are all areas where multilateral efforts are clearly needed to shape the prospect for the next decade. So I will briefly elaborate on these areas. On global health, the G20 remains determined to bring the pandemic under control everywhere as soon as possible. In the short term, we agreed to help address the bottlenecks and shortages of COVID-19 tools in low and middle income countries. In addition, we discussed the work of the multilateral leaders task force to accelerate access to COVID-19 tools. We reaffirmed our support to all collaborative efforts, including the Access to COVID-19 Tool Accelerator, so-called ACTA, and this COVAX facility, and underlined the need to address the financing gap of all ACTA pillars. Minister and governor also recognize the role of COVID-19 immunization as a global public good. In a more forward-looking perspective, we also welcome the efforts toward pandemic prevention, preparedness, and response, including the progress achieved by our health track colleagues. There was a strong consensus on the importance of this issue. The upcoming G20 Joint Finance and Health Minister meeting, which will take place in Rome on the 29th of October, will be our opportunity to discuss proposals to strengthen future pandemic prevention, preparedness, and response. On this topic, many member countries expressed a strong will to discuss proposals to improve international governance and financing, and this includes the development of coordination arrangement between finance and health ministers. Second, international taxation. At our July meeting, an agreement was reached on the key components of the two pillars of the international tax reform, that is the reallocation of profits of multinational enterprises and the global minimum tax. Today, we have achieved a final political agreement on all the elements of the two-pillar solution. This is an important result that provides an effective response to the tax challenges arising from the digitalization and the globalization of our economies. 136 countries and jurisdictions out of 140 members of the OECD Inclusive Framework joined the agreement. All G20 members joined the agreement. The new rules will contribute to a fairer and more stable international tax system. Pillar 1 will provide the reallocation of taxing rights with respect to 25% of the excess profits of largest and most profitable multinational companies, regardless of their physical presence in market jurisdictions. Together with the new taxing rights, effective and binding tax certainty mechanism will be established to prevent disputes. Moreover, the agreement on Pillar 1 provides for the removal of all digital services taxes and other relevant unilateral measures with respect to all companies. And also, there is also the commitment not to introduce such measures once the new rules are implemented. Pillar 2 provides for a minimum global effective corporate taxation of 15% for large multinational companies in each jurisdiction where they are located. The new rules will establish a global level playing field will stop the race to the bottom of corporate tax rates, and will tackle the remaining windows to artificially shift profits to low-tax jurisdiction. The G20 has called the OECD Inclusive Framework on BEPS to swiftly develop the model rules and multilateral instrument to ensure that the new framework will come into effect at the global level in 2023. Third, since the COVID-19 outbreak, the G20 committed to support vulnerable countries. Considerable progress has been achieved. First, in the short term, the debt service suspension initiative and this extension provide a vulnerable country with essential resources to respond to the health emergency. Second, G20 members provided crucial support to the general allocation of special drawing rights implemented by the IMF on the 23rd of August. This has made available the equivalent of $650 billion in additional reserves globally. We also made significant progress toward voluntarily channeling a share of these new SDR to help vulnerable countries. First, we are going to significantly scale up the Poverty Reduction and Growth Trust lending capacity in line with the funding strategy proposed by the IMF. Several countries announced new pledges. Today, Italy will also join, and we call all countries able to do so to make a similar effort. Second, today we reached an important agreement in support of a new Resilience and Sustainability Trust to be established at the IMF. The new Resilience and Sustainability Trust will provide affordable long-term financing to help low-income, small developing states and vulnerable middle-income countries to reduce risks to prospective balance of payment stability, including those related to pandemic and climate change. The IMF will now need to work on the technical details in cooperation with the World Bank. Finally, we've also started implementing the G20 Common Framework for Debt Treatment beyond the DSSI. We now urge private creditors to do the same, providing debt treatment on terms at least as favorable to ensure fair burden sharing in line with the comparability of the treatment principle. Finally, one of the main achievements of our G20 presidency has been putting green issue at the center of the G20 agenda. Today, ministers and governors agreed to coordinate their effort to tackle climate change and environmental degradation and to promote transition toward greener economies. This commitment to international coordination is a message of critical importance, especially as we head toward the COP26 in a few weeks. Following up on the July engagement on climate action, we asked the different G20 work streams to act in synergy to inform our discussion on the most profitable policy mix to move towards low greenhouse gas emission economies. To support clean energy transition, the G20 will examine a wide range of fiscal, market and regulatory mechanisms, including the use of carbon pricing mechanism. Today, we also concur that our policy dialogue on the impact of climate change-related policies, including fiscal policies, could benefit from further technical work, while more reflection is needed on the best setting to advance such work. Finally, we remain determined to promote climate finance and provide support to vulnerable countries. To this end, multilateral development banks should swiftly align their operation with the Paris Agreement, finance transition strategy, and possibly set out plans to mobilize private finance. Finally, sustainable finance is a key component of the G20 agenda, green agenda. I'm glad to announce that today we endorsed the G20 Sustainable Finance Roadmap and the synthesis report prepared by the Sustainable Finance Working Group, which is co-chaired by China and the United States. The Sustainable Finance Roadmap is a multi-year action-oriented document that will inform the broader G20 agenda on climate and sustainability. It is a flexible document designed to accommodate the evolving sustainable finance landscape going forward. To sum up, allow me to say that today we mark another set of milestones paving the way to the G20 Leaders Summit at the end of this month. To conclude, chairing the G20 finance track has been an honor for us. The pandemic has revived multilateralism with new energies and the awareness that the role of the G20 remains decisive. There is still more to do, and cooperation among G20 countries remains vital to tackle short and medium-term challenges effectively. We are confident that the legacy of the work which has been carried out this year by the G20 will last for years to come, starting from the new Indonesian presidency that our Indonesian friends will start in December. Thank you.
Thank you, Minister. Now the Q&A session. The first question, Alessandra Migliaccio, Bloomberg.
Hello? Yes, hello. Thank you for allowing me to ask the question. Good evening. My question is, have you discussed the issue of the national digital service taxes, like Italy's, like France's, for example, and do you have a timing to remove them? When will they be removed? Thank you.
Yes, thank you. Yes, this is one of the issues that has been discussed. As you know, we expect the two new pillars to be operational by the end of 2023. This will require a lot of work in terms of implementation of the two pillars. So by the end of 2023, beginning of 2024, they will be operational, and the agreement is that at that point, the national taxes will be removed. Some countries introduced those taxes, having in mind that they were suboptimal solutions in view of a better, let's say, worldwide solution. For instance, in the case of the Italian tax, since the beginning it has been established that the Italian tax will be removed when a worldwide solution would be implemented. And this is what we will do. So we expect national unilateral taxes to be removed by 2024.
Next question, Fabrizio Goria, La Stampa.
Hello everyone, can you hear me?
Yes, please.
Okay, thanks for the opportunity. I have a question for Governor Visco. Well, there are intense talk across financial markets about inflation. A large number of countries all over the world are now facing a rise of rates, and prices are spiking up rapidly. Now, central banks are debating if this is a transitory or temporary phenomenon, and for how long this phenomenon could last. Last but not least, if this level of inflation is going to be stable in the future, in the medium term, for example. The latest news from the ECB and from the Fed too have revealed there's a huge discussion about that. What's your opinion and guess, maybe? Thank you.
Thank you very much. Well, really, we talk about the G20 here, and the community of central bankers is well represented in the G20 beyond the smaller community of the ECB. The issue here has been debated. We started from the global outlook, the recovery, which is well underway, even if there are some signs of perhaps some difficulties, but really it is going much better than was expected at the beginning of the year. And together with that, we are observing, of course, an increase in inflation, again above what was expected. Now, the two are linked to an extent, because higher demand really faces the supply, which takes time to recover after the hit from the pandemics, and therefore the bottlenecks that we are seeing in a number of respects, if they are related to the pandemics, are going to somehow fade away, and as they fade away, clearly the pressures on prices will be reduced. Still, there has been a debate among us whether there is some component which starts being transitory and that could become permanent. In order for that to be the case, we need to have certain factors at work, like second order effects on wages through de facto indexation, if you want, if not formal, and the other impact that goes through the increasing inflation expectations. Now, we are not seeing any of these for the time being. We have seen the direct effect of energy prices, which has been substantial. Again, it reflects the both the acceleration in demand, but perhaps also transitory factors like weather conditions in some part of the world, and the fact that there has been really a difficulty in shipping because of the containment that has been taking place against the pandemic in a number of countries. All these probably is, in our view, still to be named as transitory, but again, these may take months before fading away. So we have to be prepared in communicating very well how we see the issues, and this is why we are discussing, debating it in the central bank community and in the ECB, as you mentioned, and not only communication, but we also have to understand whether there are others, perhaps more structural factors at work related, for example, to changes in the global value chains that may be really affected by the major disruption that the pandemic has brought.
Thank you. Next question, Gianni Trovati, Il Sole 24 Ore.
Yes, good evening, Minister and Governor. My question is for Minister Franco, and is if there is almost an esteem on revenue of minimum tax or of two pillars for Eurozone and in particular for Italy, and which can be the role of this fiscal mechanism in financing next generation EU and the European Union's balance. Thank you.
Thank you. As I said earlier, the new rules, the new pillars will be implemented, let's say, by 2024. OECD estimates that Pillar 1 will reallocate to market jurisdictions about $125 billion of profits. Italy is mainly a market jurisdiction for the largest and most profitable multinational companies. And so we expect that additional revenues will come to Italy from Pillar 1, let's say. A precise estimate of this additional revenue is now difficult because we will have to see, I mean, a number of technical details will have to be fixed in the coming year, and they will be specified in the multilateral convention that is expected to be signed in the first part of 2022. By and large, we expect that the additional revenues for Italy will be at least not smaller than the revenues that are now arising from the Italian DST, which are about €250 million on a yearly basis. But we will see that in the coming months. As to Pillar 2, the global minimum tax, again, we have an OECD estimate saying that Pillar 2, the 15% minimum tax rate, will create at the global level additional tax revenues by about $150 billion. Again, it is likely that a part of this amount of money will come to Italy. Again, to estimate the impact is complex because this will depend on the behavioral response of multinational companies and also the possible policy changes by countries which are now applying low profit tax rates. What we should keep in mind is that apart from the revenues, what is I think most important of this agreement is that we move to greater certainty in the tax domain. We move to a situation in which a multinational will know what they will have to pay, and they will work in less complex, let's say, tax framework. Second, we are going to have a level playing field and avoid a race to the bottom phenomena. Whether these revenues will be used for at the European level, this has yet to be decided. This is an open issue, but so far this has not been, I would say, considered operationally.
Okay, Mariangela Pira, Sky.
Thank you. Hi, everyone. My question is for Mr. Visco. The pandemic has exacerbated, of course, inequalities all over the world, not only within the United States, but also in other countries, such as China, for example. Beijing is trying to tackle this with the so-called common prosperity policy, trying to narrow this widening wealth gap. Do you have any evidence or data showing us these inequalities are going to be worse in the medium term? Is there something that it can be done in order to manage this, Governor Visco? Thank you.
Well, thank you. Obviously, we do not have the data on the changes in income distribution of these last couple of years, but we know that this pandemic has affected mostly persons who already had low-wage jobs, the women, young people, so already were somehow in a situation of difficulty. The fall in output has been very substantial last year, and with the fall in output we had a substantial reduction in employment. And then there is an improvement that we are observing. What has to be emphasized is that while output fell, the massive response of governments have substantially reduced the strains. Just to consider, we may have had a fall in output of the order of 8–10%, and the fall in disposable income has been much less. In the United States, actually it has actually increased a little bit. In Italy, we have, in front of a fall of 9% in output, we had a fall in disposable income less than 2.5%, and this is substantial. The effect that policies have produced is really the one that had to be really taking place. Now, what happens next? This is the important issue. Is first of all, we are observing that there is a recovery in employment, but it will be uneven across sectors, and therefore there will be changes in relative prices and relative wages, and therefore there will be to expect changes also in job opportunities, and therefore the protection system must continue to operate, even if it has to be really at the same time more inclusive, and also I'd say across countries and in Europe, for example, based on comparable evidence. The interesting thing on inclusion is that one thing that the response that we have observed is substantial use of digital devices. Digitalization has played an important role in a number of countries, and this has also been, as far as the payments and financial payments are concerned. The interesting thing here is that we are trying to make progress through our inclusive work in at least two fields. The first is direct protection for those who are more disadvantaged, because there is a digital divide. There are many opportunities coming from digitalization. We are trying to reduce the risks of the divides that really are there and may play a relevant role for those who are less capable of using these devices. And therefore the second component comes, and it is more work on education, financial education. These are the conclusions, the most important conclusions of this global partnership for financial inclusion that is operating really within the G20 at full speed.
Thank you. Last question, Janina Landau, class CNBC.
Hi everyone. The global recovery is endangered due to high energy prices, global logistics, and the scarcity of raw materials. I think about semiconductors, for example. In your opinion, is only a phase or structural factor? Did you talk about it? And what do you think needs to be done to change the situation? Thank you.
Well, first of all, yes, of course, this semiconductors issue is a relevant issue, especially for some countries, those who use them more heavily, Germany, for example, in Europe, but also for us. There are countries which rely heavily on imports, and others who also have some productive capacity. But really, this is an issue that is playing a role. It is as far as it is related to the pandemics, basically it is the result of a supply-demand imbalance. Supply was flat for a number of months. Just-in-time production really is the one that makes the supply conditions rather rigid. At the same time, demand really was increasing substantially, much more than expected, and this bottleneck is what really explains this difficulty in both relying on the chips and bottleneck and semiconductors that are needed, for example, especially in the high-tech and automobile industry, and at the same time also to consider that this is something that will be sorted out. I mean, apart from some geopolitical stories that may are worth what they are, I don't think they're substantially very credible, but what is really there is that it will take some months before the supply will adjust to demand, and therefore we basically will see still this break on the ability to satisfy demand to remain for some months.
Thank you. Our time is up. The conference has been recorded and will be available on the websites of G20, Ministry of Economy and Finance, and Bank of Italy. Thank you, Minister. Thank you, Governor. Thank you all.
Now we have to